Greetings from Mexico. If you're watching this video right now, I'm sitting on a beach with a cocktail in my hand celebrating my 20th wedding anniversary. I wanted to bring a video to you while I'm out to kind of keep the algorithm alive. Now, this video we did earlier in the year. We did a conference series. We did 14 exclusive videos earlier this year in Patreon. We called it the Fired Up Wealth Investing Conference. Now, you can see on your screen we covered all these different topics. The one I'm going to cover today is the semiconductor video from that conference series. So I'm bringing this to you at no cost to YouTube. If you want to watch the other videos in the series, check out patreon.com/firedupwealth. But this video will give you everything you need to know about the semiconductor industry. This video took many hours to put together, the research and production. Now I'm also editing this video and I'm going to include my favorite semiconductor stocks and what I actually own in my $1 million plus growth stock portfolio. So best stocks to buy for long-term investors, Semiconductor edition, but really a deep dive into the semiconductor industry. Enjoy. What's up, patrons? Eric here. We're going to do session number 5 today on semiconductors. So last time in session 4, we did the state of the cloud. And if you thought cloud was a complex universe, semiconductors is even more broad and complex. Now, with that said, I will say that it's simpler to break it down. There's really 8 primary segments, and I'm going to break those down very granular. I need you to grab some popcorn, grab a couple drinks, whatever you need, because the next hour is going to be you and me, and I'm going to teach you everything you need to know about the semiconductor industry and the state of the semiconductor industry for 2023 and beyond. Now, we call semiconductors the new oil. And I believe after you watch this video, you'll understand even more so why I feel that semiconductors are the new oil. Semiconductors are really used for everything. You think of our daily lives. It's been digitized. So everything we use, from this camera I'm speaking to you on, this microphone, this computer I'm using, everything, your car, everything around you, from your kids' toys, your TVs, your microwaves, dishwashers, everything requires semiconductors. But it's a very broad topic, and there's lots of different types of semiconductors. Also, there's lots of different segments from the process of really designing and creating and manufacturing, producing and shipping those semiconductors to end customers. So let's talk about that today. Let's break it down, and I promise you at the end of this video, you're going to understand this segment more than ever before. This will be the best semiconductor video that you've ever watched, and I guarantee you're going to appreciate this video. So let's get fired up, conference. This is session number 5. We're doing a conference here every single Friday until the first Friday in April. It's on stock market investing and financial independence. Today is session 5, state of the semiconductor sector. I'm going to give an industry overview and an update of what's going on. The new oil, semiconductors, another large and complex universe. I'll provide a breakdown of the industry and its segments. There's 8 primary segments we're going to talk about today. I'll also share stocks that fit in each of those segments so you have a better understanding. Now, there's some stocks, there's some companies that just focus on one. For example, fabless, when you think of Nvidia. Then you think of a foundry like Taiwan Semiconductor. I think most of you know what a fabless and a foundry is. I'm going to give you a little bit more clarity and detail on those. But what about the other 6 segments that complete that puzzle? And then towards the end of the video, guys, I'll provide an overview of the current environment for 2023, a history over the past several years, as well as the state of the environment today in 2023, and also what the future of semiconductors looks like over the next decade. So a quick primer here, guys, just to set the table. Global semiconductor market was valued at $559 billion in 2021, projected to reach over $1 trillion by 2031. Now, the entire sector, this is a compound annual growth rate, a CAGR of 6.21% between 2022 and 2031. But there are specific segments that are going to grow at a much higher clip than 6.21%. So what is a semiconductor? Definition here. A semiconductor is a substance that has specific electrical properties that enable it to serve as a foundation for computers and other electronic devices. It is typically a solid chemical element or compound that conducts electricity under certain conditions, but not others. This makes it an ideal medium to control electrical current and everyday electrical appliances. Semiconductors such as memory chips are the backbone and prerequisite for endeavors in emerging technologies. You think of megatrends, I talk about all the different megatrends. This is the new oil and it fuels all of those megatrends. From artificial intelligence, smartphones, adoption of Internet of Things, 5G, 6G, anything with a G behind it. Nothing has really been untouched by semiconductors. Every single segment, healthcare, automotive, industrial, all of it, aerospace and defense. Semiconductors are used to power technology that enriches our lives. Semiconductors make businesses run smarter, faster, and more efficiently. So the new oil powers all technological megatrends. Semiconductors power all of the electronic devices that we use every single day. Check this stat out, guys. This is mind-boggling stuff. Today's semiconductors, I'm towards the bottom here. Today's semiconductors are so advanced, they can contain more than 100 billion transistors. We heard Lisa Su talk at CES in Vegas. Some of those new chips have even more than this number. That's in a single piece of silicon. To put this in perspective, guys, it would take a person 1,000 years, more than 1,000 years, to count each of these transistors allowed. So first, I'm going to explain the 8 segments here. And then what I'm going to do is I'm going to go into detail of each of those segments with a couple slides and explain it. The first is going to be chip intellectual property, also called IP cores. The second is EDA tools. That's electronic design automation. The third is specialized materials. The fourth, WFE, you'll see that term a lot. That's wafer fab equipment. 5, fabless chip companies. So think Nvidia, think AMD. IDMs, that's integrated device manufacturers. And then of course you got chip foundries like a Taiwan Semiconductor. And then you have OSAT, that's outsourced semiconductor assembly and test. So here's what it looks like in a pyramid. It helps explain it. And I'm gonna break down each of the segments of this pyramid, okay? You can see chip intellectual property cores at the bottom, foundries at the top. And check this graphic out right here, guys. Now I'll go through this again later after I explain each of these segments, but this gives you an idea of what companies fit in each segment. All right, so the new oil. Here are the stages on your screen of semiconductor production. Now this is in a simplistic form, okay? And next I'm gonna break down the 8 different segments that we talked about earlier. Now these 8 steps make it sound really simple, right? You've got design, then you've got raw materials, you've got sand purification, you've got the blank wafer, the finished wafer, the cut wafer, the packaged chip, and then the chip on the circuit board. Simple enough, right? But there's a lot that goes into making that casserole. So let's look at the 8 primary industry segments and break them down. It's gonna help you understand this industry much better than you did before you watched this video. Okay, so the first one we talked about was IP cores. This is chip intellectual property. So what is that? Over 150 companies globally specialize in IP cores. 150 companies. Think of IP cores as building blocks like Legos. Companies create IP designs with the intent to resell those designs to other customers. The first one that comes to mind is ARM. Now, Nvidia tried to acquire ARM and that was shut down, basically didn't go through antitrust. But when you think of Apple, okay, Apple will license their IP cores from ARM. So they use those as a building block for their chips that they use, like for M1 chips for the Mac and so on. So ARM and Apple, right? And there's a cool logo that combines ARM and Apple. If you didn't know this, I think it's helpful to understand. You know, so Apple's making their own chips, but they're using these IP cores from ARM. So when you think of the M1 chips, the 8 core, GPUs, the 8 core CPUs and so on, they're using ARM as the backbone for that and they're building upon it. So that completes the bottom of the triangle. And here's some chip IP core companies. So you think of ARM that we just discussed, you've got Cadence, you've got Synopsys, you got Rambus and so on. So this is the very bottom of that triangle and we're gonna fill each piece of that triangle and go up and then show the triangle again at the end. Next is EDA, that's electronic design automation. So the definition here of EDA, it's a market segment consisting of software, hardware, and services with the collective goal of assisting in the definition, planning, design, implementation, verification, and subsequent manufacturing of semiconductor devices or chips. That's a mouthful, that's a big sentence. Regarding the manufacturing of these devices, the primary providers of the services are semiconductor foundries or fabs. These highly complex and costly facilities are either owned and operated by large vertically integrated semiconductor companies or operated as independent pure play manufacturing service providers. Okay, so what does that really mean? Okay, so after buying IP cores, engineers will enhance and improve designs using EDA. So for example, Apple will take an IP core from ARM, right? Then they use EDA, electronic design automation. Their engineers take that core IP and they improve upon it. When you think of US vendors for this, there's really three primary ones. There's Cadence, there's Mentor, which is now part of Siemens, and Synopsys. It often takes 2 to 3 years for end designs, 2 to 3 years. And here's what that process looks like. So there's system specification, there's architectural design, functional and logical design, there's circuit design, there's physical design, there's physical verification. Now AI is being used, artificial intelligence is being used more and more to speed up this process, to reduce that 2 to 3 year design time. So what does this look like? Here's the second layer of that onion, basically, right? So the second part of that triangle, you've got Mentor Graphics, you've got Cadence, you've got Synopsys. This is EDA, electronic design automation tools. Next, you have specialized materials and chemicals. Of course, it's going to take materials and chemicals to produce these chips, right? The end product. So specialized materials and chemicals are required to manufacture semiconductors. In fact, a lot more than you'd ever imagine. So some examples, guys. Silicon wafers. You've got wafer handling and dicing equipment. Over 100 gases are used in production. Oxygen, nitrogen, carbon dioxide, hydrogen, argon, helium, many others. And here's what that kind of looks like. This is a quick map here. You got nitrogen, oxygen, all the different gases at the top. It shows the primary applications, the sources, and so on. You can pause your screen if you want to look at this. The point I'm trying to make here is just to show you that all these different gases are used, and this is just a small component. These are the primary ones. And if you look at a gas project, there's really 5 phases. So you can see on your screen, engineering, design, and bidding. You've got the gas project on the left, the fab project on the right, and it goes all the way down to ramping in the gas supply, the tool qualification process, and so on. So examples continue. Number 4, fluids. Number 5, photomask. What is a photomask? I'll show you here in a second. So a photomask is an opaque plate with transparent areas that allow light to shine through in a defined pattern. What does that even look like? I'll show you a picture in a second. So these are commonly used in the production of integrated circuits or chips to produce a pattern on a thin wafer of material, usually of course made out of silicon. Several masks are used in turn, each one reproducing a layer of the completed design and together known as a mask set. So here's what that looks like. Kind of looks like an X-ray. So now you got that third piece of that puzzle. When you look at that triangle, we're in the third tier up. And this is materials and subsystems. You can see the different companies on your screen. So you think of like a DuPont, a Fujifilm, and so on. And then for like wafers, you've got companies that just make the wafers. So you've got Global Wafer, you've got Sumco, and so on. You can see on your screen. Okay, next let's get into semiconductor equipment. So when you think of WFE, that's wafer fab equipment. These are machines that physically manufacture the chips. There's 5 primary vendors. And you've heard of these companies, right? Applied Materials, Lam Research, KLA, ASML, and then of course Tokyo Electron. And that's the one that's probably not talked about a lot, but Tokyo Electron is actually a very good company as well. Now these are very complex and very expensive machines. In fact, later I'll show you something on a slide. An ASML machine, a new ASML machine, can cost somewhere around $150 million just for the machine. So this completes the tier for wafer fab equipment. And I think that this segment's probably pretty easy to understand. It's pretty straightforward. It's equipment. But if you guys remember over the weekend, I shared some information on Lam Research in Discord, and just the number of products that Lam Research has and the different definitions of what they do. I mean, you look at that, just one company, it's its own universe within itself. So next you got fabless. And this is the one that most people think of when you think of semiconductors. You're going to think of companies like an Nvidia or an AMD. These are fabless semiconductors. So what does fabless mean? The term fabless means that the company designs and sells the hardware and semiconductor chips, but does not manufacture the wafers or chips used in the products. Instead, it outsources the fabrication to a manufacturing plant or a foundry. So Nvidia or AMD will design a chip and they'll send it off to Taiwan Semiconductor. Taiwan Semiconductor will manufacture those chips, produce those chips. And you can see on your bottom right, so you got fabless companies. So you think of like Apple, it fits into fabless when you do the M1 chips, Nvidia, Qualcomm, Broadcom. You can see foundries on the right, Taiwan Semiconductor, you've got Global Foundries. In the middle, IDM, Intel and Samsung. Those are more vertically integrated, and we'll get to that here in a second. So fabless, they create designs leveraging IP cores and or EDA that we talked about earlier. Or they create their own designs from scratch. So examples, Apple, and they design these for their own products. In other words, they're designing those M1 chips. They're having Taiwan Semiconductor actually produce and manufacture those chips, and they're using them in their own products, in iMacs and so on. Or you've got like an Nvidia, an AMD, a Qualcomm, even an ND Semiconductor. They sell those chips that they design and have Taiwan Semiconductor or another foundry produce for them, and they sell those to other companies. And boom, you've got another piece of the puzzle, right? You get another piece of that triangle, fabless chip companies. Now you'll notice that ARM is in there. So there are a lot of these companies that do multiple segments. Next, you have IDMs. And this is important here. So please pay attention to this part. Integrated device manufacturers. What does that mean? So here's the model. You've got chip designers, the top blue. You've got the IDM there between the designers and the manufacturers. You've got chip packaging on the right, and you've got suppliers on that left in the green. And it's suppliers of equipment, of course. So an integrated device manufacturer, or an IDM, is a semiconductor company which designs, manufactures, and sells integrated circuits. Okay, that's not helpful, Eric. What else? IDM is often used to refer to a company which handles semiconductor manufacturing in-house, compared to a fabless semiconductor company which outsources production to a third party. So again, AMD and Nvidia, they're not manufacturing in-house. But an example of an IDM, like an Intel, they might design their own chips and manufacture their own chips, as well as Samsung, Texas Instruments, and others. And of course, again, the fabless are the AMDs, the Nvidias, the Qualcomms. And then the pure play foundries, you've got Global Foundries, you've got TSMC, you've got UMC. Now, this is important to understand. And the semiconductor industry has evolved, and it's evolving rapidly today. But due to the dynamic nature of the industry, the term IDM has become less accurate than when it was originally coined. In other words, there's a little bit of a gray area with a lot of these companies, especially with Intel. And the reason for that is Intel is actually sending some of their designs off to Taiwan Semiconductor to manufacture them there. And unfortunately, the sad reason for that is Intel is way behind the eight ball with technology, and they don't have the ability to create those smaller nanotechnology chips. And I'll talk about nanotechnology here in a few minutes. So moving on, we've got the model there on the right, so you can kind of study that. I'm going to continue to talk. So IDM designs, manufacture, and sell their own chips. They're going through the whole process. It's integrated, vertically integrated device manufacturer, IDM. They manufacture their own fabs. They generally don't make chips for other companies, although this is evolving. There's three primary categories. There's memory, so think of Micron. There's logic, think of Intel. There's analog, think of Analog Devices and TI. IDMs have their own fabs, but also sometimes use foundries as well. For example, Intel. Like fabless, IDMs also leverage IP and EDA that we covered earlier. IDMs purchase wafer fab equipment and use those specialized materials and chemicals that we talked about earlier. Very expensive. To bake out a new high-end design using 3 nanometer design, for example, is around $500 million. So when you see the term NM, okay, that stands for nanometer. It's a unit of measure for length. 1 nanometer is equal to there's lots of zeros in there, 1 meters, which is absolutely minute. It's very small. Nanometer is used to measure the size of the transistors that make up the processor. Clear as mud so far, guys? Okay, so what does that look like? All right, if you look at 2019, 2020, you started seeing more of the 5 nanometer. 2021, 2022, you're seeing more of the 3 nanometer. And now you're starting to see the 2 nanometer. So this is where Moore's law comes in, like how much smaller do we need these things? You can kind of see on your screen. And that's not the scale because it's kind of zoomed in, but it does give you an idea of how much smaller the 2 nanometer is compared to the 10 nanometer, which was maybe 5 years ago. And this can get pretty complex, but just think of these small little chips and just how complicated they are. I mean, it's mind-boggling to me how much goes into one of these small little semiconductors that can power so much. Okay, I'm putting the definition back up there again in case you want to read through that. We already covered it, but this is the next piece of the puzzle, right? Part of that triangle. This is IDMs. So you've got Micron, Intel, Samsung, and so on. Okay, foundries. This is also pretty easy to understand, but there's some terminology here that will be helpful. If you see the word fab or foundry, it means the same thing. So a semiconductor manufacturer that makes chips for other companies are also called fabs or foundries. Semiconductor foundries make most of the chips in the world for hundreds of fabless companies like AMD and Nvidia. So those kind of companies, again, fabless. They don't manufacture, they only design. And then the last sentence there goes back into IDMs, where it kind of crosses those two things together. All right, so foundries do not design chips. They manufacture chips from a fabless company or from an IDM. Now it's starting to get more gray area, like I mentioned earlier. Fabs manufacture chips for other companies, though, and it's primarily for fabless companies. Foundries create unique processes to manufacture chips using equipment. So foundries use that wafer fab equipment we talked about, as well as the specialized materials and chemicals we talked about. Taiwan Semiconductor is the global leader, followed by Samsung, and that's specifically for logic. Now, there are other specialized fabs that create chips for analog, for power, displays, secure military, and others. Building a new state-of-the-art plant for these smaller nanometer chips costs around $20 billion. And we'll talk more about this here later. So those are some crazy stats, mind-boggling stats, and I have some more crazy stats for you. Listen to this. Taiwan makes 65% of the world's semiconductors and almost 90% of advanced chips. When we talk about those small nanometers, 90% in Taiwan. So Taiwan is the world's largest chip maker. They're very important. So look at this from 2001 to 2020. Now this is really telling. 2001, look at all the different foundries on the left-hand side. There were a ton of companies doing this. The problem is it's so expensive and a lot of people just got out of it altogether and it shrank down. If you go to the very right side, in 2020, if you're looking at the smaller nanometer chips, it's basically just Samsung and Taiwan Semiconductor, with Taiwan Semiconductor dominating. Now, if you look to the left of that red circle, you'll see Samsung, Taiwan Semiconductor, and Intel is not on the far right. And this goes into the CHIPS Act and why we're spending a bunch of money to try to improve our position there. It's very important, and this ties it all together, and I'll talk about it later. So this is a powerful infographic here. So Taiwan is 64% in that blue. Now, of that 64%, Taiwan Semiconductor is 54% of that. UMC is 7%. You can see some smaller players. South Korea has 18%, and of that 18%, 16% is Samsung. And then you have China in there at 9%. You've got the US in there with Global Foundries. We need to get Intel on that list. And then you've got others, only 2%. And Israel, you've got Tower at 1.3%. So this is pretty cool stuff, right? Let's keep going. Taiwan Semiconductor now, they're going to spend $40 billion to make advanced chips in the United States. Now, this is just back in December 6, 2022. Taiwan Semiconductor announced it'll build a second fabrication plant in Arizona. The second fab is expected to go online in 2026. So it takes tons of money, billions of dollars, and it takes years to build these things. Now this plant is going to focus on those 3 nanometer chips. So it costs $12 billion for this one. Taiwan Semiconductor's first Arizona fab is expected to go online in 2024, and that manufactures the 5 nanometer chips. So TSM points out that the addition of the second plant will make its total investment in Arizona $40 billion for the 2 fabs combined. It's not surprising to see that Taiwan Semiconductor has more than tripled its investment in the Arizona fabrication plants. The company estimates that it'll generate $10 billion in annual revenue from both plants when they go online. $10 billion a year. So we need Intel to catch up. We'll talk about the CHIPS Act here later. Now, the good news is that we do have semiconductor manufacturing across America now. The dark blue is a new project. The lighter blue circle, that's an existing facility. And you can see there's dark blue in several different states on your screen, including Texas, New Mexico, Oregon, and so on. So this is a great chart, and it shows you who's building what and where. So at the very top, Global Foundries, you can see they're doing $1 billion investment in Malta, New York. You got Intel, you can see 2 different plants there in Arizona, as well as New Mexico and Ohio. Now, Samsung is building one in Taylor, Texas, and then a second one in Austin/Taylor, Texas. And you can see the numbers on here. This says the Samsung foundry, that's $192 billion. Completion date is 2034 to 2042. That's a long ways away. The Global Foundries, one at the top, should be completed here soon. And then Intel's got 2024, 2025. Then you've got the Taiwan Semiconductor one. That's $12 billion plus the one I just talked about in Arizona here. And then you got Texas Instruments. They're building $30 billion in Sherman, Texas. And that's going to be completed 2025 and onwards. It's part of the reason I'm very bullish right now on Texas Instruments. All right, good stuff. So that's the very top of the triangle. You got the chip foundries. One last thing real quick, I want to talk about the fabrication steps. Now, in the beginning, I kind of covered from a high level. This goes a little bit deeper. You can see step 1 on the top left. The wafers are sawed, right? And then they're polished and so on around the wheel. You can see step 5 there. Step 5 is important for ASML, and it goes all the way around that circle to number 12, which is package and assembly of the chips. And so that's a good segue to this other component here. All right, so this is outsourced semiconductor assembly and test, or OSAT. What is outsourced semiconductor semiconductor assembly and test. These are the companies that offer third-party packaging and test services. So they package and they test chips that are created by foundries and by IDMs. They take the wafers manufactured by the foundries and they dice or cut them into individual chips. They test the chips, they package the chips, and they ship them to the end customers. Okay, so as you can see from going through that, this is a very complicated and massive ecosystem, but I try to break it down in granular levels and explain each segment. So hopefully this helps quite a bit, kind of break those segments down. And again, this is the triangle that shows you those segments again and the different companies that fit in each of those segments. Here's another illustration I think that helps put that together a little bit better. So you think of the value chain. You've got design IP, you've got ARM on the top left there. You've got the EDA we talked about with Cadence and so on. The fabless design, the equipment. And you can kind of see how that all flows together. And I think the triangle is helpful, but it's also, if you're more of an engineering mind, it's helpful to see a flow chart like this. But all the different things we just talked about, they fit onto this value chain, and it kind of shows you the different focuses, the different niches for each of these companies and segments. Okay, so hopefully that was helpful breaking down the different segments. Now that we have a better understanding, let's talk about the state of the semiconductor sector overall in 2023 and beyond. So of course we had a semiconductor shortage. We had COVID, we had a lot of supply chain issues and disruptions, and these companies worked really hard to try to meet that demand. They ramped up production. And so what you have now is you have some issues with overstocking. So if I'm manufacturing cars and I need semiconductors and I'm constantly running out or it takes weeks and weeks to get them, I'm just gonna order a bunch of them ahead of time so I can get as many as I can. I'm gonna stockpile them. Well, now you've got a surplus of inventory, right? We talk about that, on YouTube, even when you're thinking of Nvidia with GPUs. And Nvidia has its own nuances because you also have the used market when you think of Bitcoin mining and flooding the used market. But just focusing on the overall segment, and you think of the disruption of the supply chain, these companies had to ramp up and innovate the best they can to get through that tough time. So there's a silver lining there. I really think there's a silver lining when you're thinking longer term in the next 5 or 10 years. And it's really put a focus on energy and efforts to bring some of this back to the United States, especially when you think of foundries. So I think there's a lot of positives to what's happened over the last couple of years. If you look at the global industry, it's on pace to ship more semiconductors this year than any other year in history, even with some of the disruptions we've had and even with the overstocking of supply. US semiconductor companies continue to invest roughly 1/5 of annual revenue into research and development. In 2021, that was $50.2 billion, and that number is much higher now. The CHIPS Act is a big deal. It's a really big deal. And I think some of those supply chain disruptions helps really spark that to understand it. And obviously the geopolitical tensions with China is part of it as well. And some of the backstory there, trying to stop them from getting the most advanced artificial intelligence chips. So putting a lockdown on what AMD can sell, what Nvidia can sell. Now you've also have, like Japan is kind of joining that party. You've got ASML, joining that party, not selling equipment to China and so on. But the CHIPS Act is a big deal. And it's going to strengthen domestic semiconductor production and innovation in the years ahead. It's going to be important. The CHIPS Act includes $52 billion in chip manufacturing incentives and research investments, as well as an investment tax credit for semiconductor manufacturing and equipment manufacturing. So despite a historic year in 2022, semiconductor industry continues to face significant challenges. Global semiconductor sales growth slowed substantially during the second half of 2022, and this market, of course, is known for cyclicality, so it's not uncommon. It's not projected to rebound until the second half of 2023, and you've seen that in some of the earnings reports. In addition, US-China tensions continue to have repercussions on the global supply chain, leading to the proliferation of government controls on sales of chips to China, like I just mentioned, and that's the world's largest semiconductor market. Overall, 2022 was highly successful, and semiconductors are poised to have a greater positive impact on the world than ever before. With effective government-industry collaboration in the years ahead, the industry can continue to grow, innovate, and realize an even brighter future built on semiconductors. Okay, so some of the CHIPS incentives on this CHIPS Act. Manufacturing Incentive Program, so $39 billion there. And then you've got the Advanced Manufacturing Investment Credit. So establish 25% Advanced Manufacturing Investment Tax Credit to be implemented by the U.S. Department of Treasury as a complement to the Manufacturing Incentive Program. Together, these incentives will lower the cost gap between investing in the U.S. and investing abroad while generating greater benefits to the U.S. economy, national security, supply chain, and technology leadership. Semiconductors actually employ a lot of people in the U.S. I'm going to show you some stats on that here in a minute. So $39 billion on the Manufacturing Incentive Program and then the 25% manufacturing tax credit. So it's already making an impact. So 46 new semiconductor ecosystem projects across the US, including the construction of new semiconductor manufacturing facilities, expansion of existing sites, and facilities that supply the materials and equipment used in manufacturing. This CHIPS Act is actually pretty legit, guys. It's very solid. It's doing a lot of great things, and it's going to lead to more jobs down the road as well. $180 billion in company investments in the US, 200,000 jobs created across the US economy, including 36,000 direct jobs in the semiconductor ecosystem. There's a lot of indirect jobs as well. These projects include the construction of 15 new fabs and expansion of 9 fabs across 12 states, in addition to numerous investments in semiconductor materials, chemicals, gases, raw wafers, and more. This is very, very good. Here's that map again. You can see all the different production manufacturing across America. And that dark blue again, there's new projects. So the CHIPS Act is actually called the CHIPS and Science Act, and it also invests $13 billion in semiconductor R&D, research and development. This will spur innovation for decades to come and help ensure that the US retains its technology leadership. So for example, they've got the National Semiconductor Technology Center, they've got the Advanced Packaging Manufacturer Program, they've got the CHIPS Defense Fund, which actually puts $2 billion into the DoD, Department of Defense. And you can pause your screen and read through that, but these are the different R&D programs that $13 billion are going to help support. So this one is big. Now this is design market share by region of company headquarters. You can see the US is dark blue. Now look at the far left, that's 2000. Look at the far right, that's projected 2030. You can see the US 50%, and it's projected to be 36% in 2030. Again, this is design market share. But you can see, for example, Taiwan, it went from basically 0 to 7%. So they're doing more design. You can see, for example, mainland China. It went from not even being on the list in 2000 to 23% by 2030. This is what the United States government is trying to really slow down. They're trying to ensure that the United States maintains its leadership position in the semiconductor space. The other one that's interesting on there is Japan, shrinking from 28% to 8%. All right, so global efforts, not just in the US, but all across the globe. The European Union, February 2022, they've got the EU CHIPS Act. You might not even heard of that before, $43 billion. South Korea, they've got stuff going on. Japan, Taiwan, Southeast Asia, India, Mexico, Canada, all over the globe. Semiconductors are the new oil, and governments are realizing this, and they're spending money to protect their interests within the space. Everything runs on semiconductors. When you think about it, we've had wars, lots of wars over oil. When you think about the importance of semiconductors, sadly it's getting to that point. There's so many geopolitical issues that are tied into all this. But countries are realizing the importance of having leadership in this. And just think about this. Like we mentioned earlier, Taiwan have a 90% market share of advanced chips. And that's a big deal. If China decides to take over, and I'm not trying to speculate here or anything like that, but the reason why Taiwan Semiconductor stock doesn't go higher and higher is a lot of people are afraid to invest for those geopolitical concerns. But that's a threat to our national security if a government like China could essentially just take over 90% of the advanced chips. That's why it's so important to understand. So we mentioned earlier about the shortage, and you can kind of see some numbers on here. So semiconductor companies working hard to meet demand. Now, if you look at the foundry utilization rate, that's that kind of dark blue line that's kind of squiggly on there. You can see that the capacity in shipments, you can kind of see how the shipments have actually gone down. So we talked earlier about having oversupply. You can see the capacity in thousands. That's the dark blue line going up. You can see that number is ramping up. And you can see the shipments, how it actually dipped in Q4 of 2022, pretty significantly there. You can also see the utilization rate of foundries, how it had to ramp up in 2021 and it's ramped down in 2022 and kind of fell off a cliff at the end of 2022. So this is important to understand because it's a cyclical business and you're going to have a little bit of slowdown here. You're going to have some headwinds, I think, over the next couple of quarters. I'm not going to read this whole thing, but the highlighted part is important. While the chip shortage and the impact of the pandemic began to ease in 2022, increased demand for semiconductors is expected to persist over the next decade. This is the growth for 2020 and 2021. Look at that chart. I mean, it's a parabolic chart going from 2001 to 2021. The demand was completely off the charts, and there's going to be some cyclicality, some slowdown to that. And we also talk about in the cloud video pull through. So we had some pull through with a lot of this stuff as well. So following relatively strong sales of $440.4 billion in 2020, global semiconductor sales in 2021, the most recent year of full data, we should be getting the 2022 full data soon, increased by a record 26.2% to $559.9 billion, largely to demand growth spurred by the COVID-19 pandemic. Again, pull through. You're going to have some tough comps. You're going to have some headwinds. You might see some of these companies sell off similar to cloud, and there could be some opportunities. Now, right now, the market's been very bullish, so it's hard to say, but what's baked in? What are the expectations for the market? And will we actually see an increase in demand in the back half of 2023? I think the market's assuming that right now, but if that isn't the case, well, you could see some more volatility and you could see maybe some opportunities later in this year. I think this one's good too. This is showing you 2021 demand by end use, to give you an idea of where semiconductors are used the most and the growth. So you can see the growth was 23.1%. This is 2021. Now, of course, that growth was also pulled through from the pandemic, work from home, things like that. But you can see on the very bottom, total value in billions. You can see computers is worth about 175 billion. Communications is 170 billion. Automotive is 69 billion, but I think that's going to grow exponentially here. Consumer, 68 billion. Industrial is about 67 billion. And then government, mostly for aerospace and defense, 5.8 billion. You can also see, this is powerful, guys. This is a really powerful infographic here. Top US exports. We talk about the new oil, right? So refined oil was actually $92 billion, aircraft $80 billion, crude oil was $69 billion, semiconductors $62 billion. This is for top US exports in 2021. So oil is still a big deal. And it's not that we don't need oil, but this is the next oil. This is the new oil, right? So this is the total gross value added contribution to GDP for the US semiconductor industry. Now this is in billions. So direct is 96.1 billion. But indirect, 85.6 billion, and then induced is 95.3 billion. If you combine those three different pieces of the puzzle together, $276.9 billion. That's a big number. So when you start adding the whole thing together and looking at GDP, it's a big component. This is R&D, so research and development expenditures as a percentage of sales. So you think of biotech, of course, they're going to spend a lot of money on research and development. You would expect that to be 21.4%. Semiconductors is second, more than software at 18%. And the US leads in this category with 18%, Europe at 15%, and so on. But I think this is also a very powerful infographic just to give you an idea of how much money is spent on R&D to press the envelope for future. So this is a supplement from the previous couple of slides. We talked about the GDP numbers. This also shows the employment numbers though. And so if you look at this, it shows the direct is dark blue, and then you got that turquoise kind of color indirect, and then the light blue, baby blue is induced. So GDP total is 276.9 billion. Employment, look at the number there, guys. 1,836,711. Income, US billions, $165.1 billion. So the US semiconductor industry, just the United States, accounts for over 250,000 direct US jobs. In addition, nearly 1.6 million indirect and induced jobs. One semiconductor job in the United States supports 5.7 jobs in other parts of the US economy. That's nearly 1.6 million additional American jobs. And the CHIPS Act is a very big deal and helps support all this. So are semiconductors the new oil? We talk about the megatrends: artificial intelligence, data centers, cloud computing, cybersecurity, aerospace and defense, space exploration, video gaming, online gambling, AR, VR, MR, autonomous driving, electric vehicles, genomics, robotic surgery, esports, 5G, 6G, 7G, anything with a G behind it, e-commerce, digital twins, cryptocurrency, metaverse. All these megatrends need semiconductors, the new oil. And let's look at different segments really fast here. Automotive, this is 2021 to 2027. And you can see the growth there, guys. I mean, these are different segments here. You should got analog and MEMS and so on. I'm not going to read through all of it, but it goes from $44 billion to $80.7 billion in 2027. That's a compound annual growth rate of 11.1% a year. This is part of the reason why I'm bullish on companies like Indie Semiconductor. And if you look at the trends here, guys, this is from 2010, 2020, 2030. We've talked about this before, but in 2030, we're looking at 1,000 on the top. So I mean, look at the number of growth from 0.02 to 70 to 1,000 with full autonomous driving. Of course, data center is big too. And here's a nice infographic showing you growth in data center 2019 to 2027 to give you an idea of the growth ahead of us. North America is on that far left, that darker blue, and you can see it ramp up nicely. You've got the different zones in there, but that growth is very steady and it's going to continue to grow over the next 5 and 10 years. Part of the reason why I'm so bullish on companies like Amazon Web Services, Microsoft Azure, Google Cloud Platform, the different cloud companies we talk about, as well as semiconductors. Data centers need the semiconductor equipment to run. And data is the new oil, but data needs semiconductors, and so semiconductors, that's the new oil. And then you've got Internet of Things. I mean, look at the growth here. This is the 2025, and you can just see that sharp ramp up. You think of 5G, but really in the future, everything is going to be connected devices. This only goes to 2025. I'd love to see this chart go another 10 years out. This is going to continue to grow exponentially, and it's going to require semiconductors for that growth. So as you can see, semiconductors are the new oil, and this last chart here shows you the growth from 2021 to 2030 projected. And you can see this is in billions of dollars. It's 772 with a nice ramp upwards. I want to capture as much of this growth as I can in my long-term investing portfolio, my growth stock portfolio. And this is why semiconductors and cloud services are a big part of my concentration. So what I want to do now is I want to share what I own in my primary taxable brokerage. This is my $1 million plus taxable brokerage growth stock portfolio. We also own several of these stocks in the Fired Up Wealth community portfolio as well. So I own 10 positions that are specific to semiconductors, 9 individual stocks and 1 ETF. I'm going to go through each of these holdings and show you the percentages I own, the percentage of the account, the current value, my total gain and loss, the number of shares I own, the cost basis, everything. So we're going to go in order from highest concentration, so highest percentage of portfolio. The first stock is going to be Nvidia. Now I've owned this long since 2018. My cost basis is under $40 a share. Right now it's worth about $111,000. It's a little over 8% of my portfolio. So I have 283.709 shares. And of course I have fractional shares because I've been doing DRIP, dividend reinvestment. So the cost basis would be slightly lower, but it's going to use those dividends reinvested as part of that cost basis. Next is AMD. That's 4.41% of the account. It's just under $61,000. I'm up about 65% of my position. I have 500 shares and my cost basis isn't as good as I'd like it to be, but it's $73.72. The third highest, this is a Discord pick from 2021. And I encourage you guys to join our Patreon Discord. You can go to patreon.com/firedupwealth. This was a Discord buy. Axcelis. It's about 2.85% of my portfolio. This is a small cap semiconductor manufacturer. I have 250 shares. I'm trying to shave 50 shares here soon. I actually had an order in a few days ago at 167.77 to sell 50 shares, and I missed it by like 35 cents. It was so close. But if I sell 50 shares, that would capture back my cost basis. My original cost basis is $73.50 plus about, I don't know, $1,000 or so of profit, and I would keep 200 shares long. But right now I have 250 shares. It's up about 435%. So that one really grew into its position being that high up. Now this isn't showing you the entire portfolio. I have about 65 holdings. This is showing you the percentage of account based on semiconductors. So these are not the top stocks by any means. Nvidia and AMD is certainly high on the list, but there are several other stocks in there like Microsoft and Snowflake, Google, Amazon, Apple, and so on. So the fourth one I've owned for a while. This is a semiconductor manufacturer as well. And this is actually house shares. What I own currently on Lam, I have 62 shares. It's up about 270%. So that's 2.8% of my portfolio. My cost basis on what I own is $168.45, but really it's house shares. And that's the same with Nvidia as well. Nvidia is really house shares at this point because I have shaved Nvidia in several other accounts that I've owned it, but I'm just showing you the actual P&L from Fidelity. So even if it's house shares, it's still going to show you that cost basis. The fifth highest is going to be another small cap. And this is a Fired Up Wealth favorite. It's called Indie Semiconductor. Now this is fabless. It's focused on automotive. It's a little over 2% portfolio. I'm up about 25%. My cost basis is $752 and it could be better. Right now it's at $9.34, but I have 3,100 shares. Now we do own Indie, Nvidia, AMD in the Fired Up Wealth community portfolio, and Indie actually has a much lower cost cost basis in that portfolio. But I've got about $29,000 worth of Indy. The next one, number 6 in rank, is going to be an ETF. It's SOXX. So that's a little over 2% of portfolio. I'm up on it right now about 135%. The cost basis is 205, and there's 59.155 shares, of course, dividend reinvesting. Next is going to be SiTime, another small cap. It's 1.78% portfolio. I'm only up about 6% on that right now. We do have a much better cost basis in the community portfolio on SiTime as well. My cost basis is 92.55. I started buying at 130 and bought it all the way down. A lot of people in Discord actually have cost basis, closer to $80. But right now I have on SiTime, it's about 1.78%, so 250 shares. Next is Broadcom. This is about 1.75% of portfolio, a little over 30 shares. It's been reinvesting. I've owned it for several years now. It's up about 200%, 190%. My cost basis is $277. Next is Marvell Technology. This has been on a nice run here with AI recently in earnings. 1.34% of portfolio. I'm up about 57.42%. My cost basis is $38.60. This has been a buy in Discord, $40 or under for some time. A lot of people do own this stock between 35 and 40 from Discord. So I have a little over 300 shares. And again, I'm doing dividend reinvestment on this as well. The last one is really a spec stock. It's Skywater Technology. This is a small cap fab. And I did interview the CEO on the channel. Go check that one out. Now, I just started buying it recently, so I don't have a lot of this. It's about 0.5% of portfolio, and I'm trying to add more shares. So that's a total of 10 positions, 9 individual stocks, 1 ETF, and the total concentration for semiconductors in the portfolio is 27.67%. I'm very bullish on software and semiconductors. I used to work in the software industry. These are the areas that I know best, and these are the areas that I'm most bullish on. Now, in my retirement, I have ETFs only. So I do have things like QQQ, and I do have things like SOX, SOXX, but I generally don't have individual stocks in retirement. So you have to keep that in mind because I have several retirement accounts. Those are all ETFs. Everything I have in my taxable brokerage is going to be individual stocks with a few ETFs. I would typically have a little bit more ETF concentration in portfolio, but because this portfolio is really focused on growth and I have so much in ETFs already, I have mostly individual stocks in this taxable brokerage. So there it is, all of the semiconductor positions in my $1 million plus growth stock portfolio. This is not financial advice, doesn't mean go buy these stocks. I'm just sharing with you what I own. All right, stay with me, guys. I know this video is long and it's filled with lots of information, but I hope it's very helpful. So chips have become denser. The cost of building fabs has skyrocketed. We talked about some of the numbers earlier. $10 billion for one chip factory, sometimes $20 billion or even more. And just one machine from ASML, $150 million. There are 500 plus machines in a fab. So not all of them are as expensive as that $150 million machine from ASML, but think of 500 machines costing millions of dollars each. The fab building is incredibly complex. The clean room where the chips are made is just the tip of the iceberg of a complex set of plumbing feeding gases, power, liquids, and so on. These are state-of-the-art facilities. It's not a child's game. There's a lot of barriers of entry, not only with money and time, but also just expertise. The multi-billion-dollar cost of staying at the leading edge, it's come with a price, and a lot of companies have dropped out of the race. We saw some of that earlier. In 2001, there were 17 companies. I showed you that graph earlier and showed you the different companies. 17 companies were making it the most advanced chips for 2001. Today, there's only 2, Taiwan Semiconductor and Samsung. And Taiwan dominates that. And given that China believes Taiwan is a province of China, this could be problematic for the West. So what's next with technology? Instead of making a single processor do all the work, logic chip designers have put multiple specialized processors inside of a chip. These chips are now made denser by stacking them 100 plus layers high. As chips get more complex to design, which means larger design teams, longer time to market, EDA companies are using artificial intelligence, as I mentioned earlier, to speed up this process. And then the wafer equipment manufacturers are designing new equipment to help fabs make chips with less power, better performance, faster time to market, and so on. What's next for business? The business model of IDMs, for example, Intel, is rapidly changing, and I alluded to this earlier. In the past, there was a huge competitive advantage of being vertically integrated. So having your own design tools and fabs and so on, like we mentioned earlier, today, it's a disadvantage. It's hard to be the jack of all trades and the ace of none. Foundries have economies of scale and standardization. Rather than having to invent it all themselves, they can utilize the entire stack of innovation in the ecosystem and just focus on manufacturing, which is more complex than ever. AMD has proven that it's possible to shift from an IDM to a fabless foundry. So AMD used to be an IDM, like Intel. And part of the reason you're seeing AMD outperform Intel is because they made this wise decision to do this. AMD went from an IDM to a fabless foundry. Now Intel is trying to do that, but they waited way too long. And it's causing some serious problems with the business. We saw it in the last earnings report. So Intel is trying to do this, and they're going to use Taiwan Semiconductor as a foundry for their chips, as well as set up their own foundry. But the reality is the most advanced chips are being done by Taiwan Semiconductor. And finally, what's next with geopolitics? Controlling advanced chip manufacturing for the 21st century may prove being like controlling the oil supply in the 20th, the new oil. The country that controls this manufacturing can throttle the military and economic power of others. Ensuring a steady supply of chips has become national priority. China's largest import by dollars is semiconductors, larger than oil. Today, both the US and China are rapidly trying to figure out their ecosystems, and they're trying to decouple those systems from each other. China's pouring $100 billion plus in government incentives to build Chinese fabs, while also trying to create supplies, their own supply chain basically of wafer equipment, EDA software, and so on. And of course, over the last few decades, the United States moved a lot of their fab production over to Asia. And now we're trying to bring that back. Quite simply, guys, we're just understanding the importance of not having to rely on someone else to get this stuff done. We're realizing how important semiconductors are to our daily lives. So that concludes session 5 on semiconductors, guys. I hope this video was helpful. I hope you learned a lot about semiconductors, the different segments, and why I like to call it the new oil. Thanks for watching, guys. Have a great rest of your day. Take care.